time is obviously your friend, that if you are in it to a reasonable amount of time, long enough, you're going to understand what the pitfalls are. And when you're approached by potential partnerships, relationships, and deals, those red flags become a lot more evident. You just see them.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me today, I'm excited to have Alix Kogan. Alix, how are you doing today?
I'm great, Todd. How are you?
I am doing fantastic. And Alix, you've got a extensive background in real estate, been in the business for 20-ish years. Why don't you give our listeners a bit about your background, your company, what your focus is today? Let's go through a little bit of that transition, because you've had a history of being in this market.
Sure. So starting out, I grew up in a very entrepreneurial construction and real estate family. So just by being around it, I think I had no fear and thought at some point I'll get into it. But I took a detour. Actually, I taught high school for about a year and a half, thinking I was going to save the world and stay as far as I can away from building and real estate and all that. I think I was a little bit young and dumb. And anyway. So after teaching high school for a year and a half, I actually was vacationing in this little town called Durango, Colorado on the weekends. At some point when I was done teaching high school, I said, I could move here and I could start a construction company, and I think I could do pretty well. Well, again, it was more of that overconfidence, so I just did it and moved to Durango, Colorado 20 years ago. Went to work for another builder, did that for about a year, and then started my company. And, the timing was great. The company took off. We doubled in size every year for quite a few years and grew that company to be the largest design build firm. We were fully integrated designers, architects, construction team. And so I built that to be the largest in Southwest Colorado. And about 3 months ago, actually sold that company and exited that. My family and I moved back to Chicago, where I'm from. And but backing up, shortly after starting the company 20 years ago, I also started developing. So I have great opportunities to build single-family spec homes, small developments, 10, 12 lot subdivisions, some mixed use, some condos, townhomes, and then as well as single family rentals. So continued down that path, did pretty well there, assembled a single family portfolio. And then I think I went through the same cycle that most do, that, at some point you get to a single family portfolio and it's driving you crazy and you're managing and you're running all over the place. And you're thinking there must be a better way. So learned about, not that I didn't know about it, but I had an opportunity actually 8-9 years ago to buy a large multifamily project, and we got to the 12th hour and there was some partner issues and people I wasn't comfortable partnering with, so I pulled the plug on that deal. But it got me thinking that at some point I really need to find the right partners, the right structure, and invest. And that's what I did several years ago. So pivoted out of single family, divested, or I should say divesting. I still have some stragglers that I own, but divested of the majority of my single family and started investing as an LP, a limited partner investor, and then started getting more involved with some of the guys that I was investing with. I got on the general partnership side. And then ultimately, in the last year or so, I've been really focused on being a key principal, lending my balance sheet, helping groups raise capital, raise equity, operationally as well. And that's been a good move for me. So that's what I'm primarily specializing in now, as well as my distressed debt business. So I buy non-performing notes. That's about half of my business. The other half is apartments.
So a little bit about the non-performing notes before we dive into the apartment side. Explain that to our listeners for those who don't know what that is.
Sure. So what we do is we buy bad debt, in essence, from banks. So loans that have gone into default. And I specialize in second liens rather than first liens. Um, it's a little bit of a different play. It'll probably take a while to explain really the strategy and the reasons. But imagine that a simple example, let's just say you've got a house, a $500,000 house. The owner decided to finish their basement, took a $100,000 home equity loan to finish their basement.
Yeah.
Some economic event happened, and they kept paying their first mortgage, but stopped paying on that home equity loan of that $100,000 loan. That's the type of asset that I buy. So banks will at some point aggregate a pool of these $100,000 loans, so to speak, and sell a larger pool. And that's what we will buy. And then we go back to the homeowner, and because we bought it at such a discount, we can negotiate a modification of their loan. Sometimes they'll pay it off. There's a number of exit strategies. And so we are not trying to get at the asset. The guys in the first lien space, they want to foreclose, they want to get the asset and then fix and flip it. We're turning it into a rental. That's not what we do. We're trying to keep people in the house and help them, and obviously make a profit as well.
So you might have a $100K a second, and maybe you guys can buy it for, I'm just going to throw a number out there, $30,000 or something like that.
Yep.
And instead of having to charge, the $500 a month that they were getting charged, you guys can come in, you could charge, $250, $200, something like that.
Exactly.
Renegotiate with them. And okay.
That's exactly right. It might be changing the monthly payment, the term, but that's ultimately it. And then we will season the note. We get that borrower to perform and pay for 6 to 12 months. And then we resell that loan on the secondary market because now it's worth a lot more. And in some cases, we'll just keep the note for cash flow. So multiple exit strategies. Keep it. You can even sell a partial. I could sell you, half of the payments and keep the back half.
Huh. Interesting. So when you buy this, let's say you buy this loan for $30K that was started out as 100. Does the borrower still owe 100?
They do, but I mean, and they
you
actually may owe. They actually may owe. The unpaid balance that you can be maybe 100,000, but they may have another 25,000 in arrears.
Yeah.
So I'm in a position where I could forgive the arrears. I can forgive some of the principal. So there's a number of things I can do based on what did I buy the loan at? What's the specific situation with the borrower? So you got to understand where they're at, and you come up with a win-win.
Yeah, that makes sense. So you could actually take their 100K and you could forgive some of that if you wanted to, if it made sense to continue having them pay or get this loan right-sized. Very interesting. Okay.
Yeah.
Awesome. Well, that sounds like kind of a fun business.
Yeah.
And then the other part of your business then is the multifamily. And so you're looking at coming in as a KP. You're looking at coming in as a partner as well, part of the general partnership with strategic partnerships, and helping provide value that way. Explain a KP and why is it necessary? Like, why would I want to bring you on as a KP? What's that?
Sure. Well, typically the KP role, key principal, you've got guys who have some experience and have syndicated deals, but their net worth is not there yet to be able to take down a deal independently. So, you typically need to have the same amount of the net worth as the amount of the loan, and plus 10% of that in liquid funds post-closing. So that's the typical benchmark of where you need to be to qualify for agency debt. So that's where I come in. And if you have whatever, we'll just throw out some random numbers. If you have a net worth of 5 million and the deal takes 10 million, I can come in and help as the key principal satisfy that need for the loan. Additionally, help operationally, especially I have a construction background as well. So, evaluating the property, evaluating the CapEx, the value add rehab needs. Obviously I'm there, I can help the operators raise equity, and then go forward basis, just operationally as the asset manager, make sure that the property manager is doing what they need to be doing. Just another set of eyes and support.
Yeah. So you're looking for a partnership, something that, ideally for you is something that you can add real value to, that you can bring your specific skill sets into the right deals. That makes sense for both parties.
Yeah, absolutely. Guys who want to scale their business and have good deal flow and that are boots on the ground and understand the markets and the sub-markets, that's a perfect candidate for me that would bring me deal flow and say, look, I've got a great deal, I'm looking at it. And ideally I want to get to know you even before you have a deal. That's the interesting dynamic. I get a lot of phone calls from guys that, I've got a deal under LOI and I need earnest money Monday. I'm like, who are you? so that's important. But so ideally I would get to know those potential partners early on, well before they have a deal. What's their track record, what kind of person are they, et cetera. And then when they have the deal, then it's a matter of us focusing on the deal rather than the relationship. The relationship's already built. But so let's just say that they have that deal that comes along. I would be there shoulder to shoulder with them to underwrite it. I can help somebody maybe that doesn't have the net worth and as long of a track record to be taken seriously. I can provide my balance sheet, my financial statements that the seller and seller's agent can feel that there's some horsepower behind the offer and the buyers. So I've done that, and we just go on from there and make sure that the deal is right, makes sense for everybody.
Yeah, that makes sense. Let's talk a little bit about your construction business and really your businesses now. And I want to talk about the success of those businesses. And you said you started your company in Southwest Colorado and became the largest in that area. What are some key factors that took you there and that you still employ today, that our listeners can get from you? Key factors to be able to grow your business. I mean, everybody that is listening here wants to continue to grow their business, mostly multifamily investors that want to grow and have success. So what can you give us?
Sure. Well, I can tell you some of the key strategic moves that I did early on that set me up for success. And I think some of those are applicable to different businesses and some to the apartment space as well. One of the biggest things that I did early on is recognize what the market didn't have. It didn't have a lot of design build players. It was the typical builder and separate architects, separate interior designers, engineers, landscape designers, all these different entities. So it was challenging for somebody who decided to buy a piece of property and build a house, design and build a house. So I brought that in-house early, and I did that, delicately. I didn't just go out and say, I'm going to, hire an architect tomorrow and have the overhead, because I didn't have, enough business starting out at first. So the strategic alliances and partnerships, that philosophy, I think, has been successful and continues on today with all the businesses that I have today. So, I certainly call myself a designer. I'm not an architect. I was, never trained as an architect, but I have a good eye and I know how to design homes. So early on, I started aligning myself with draftsmen and architects that I could outsource to, so I could drive the design process. I could make it much more integrated, so I can be pricing the project as we're designing it and having a significant design involvement myself. And naturally, that took off. The company grew as a result. I think the company grew as a result of smart marketing. I mean, no mystery there. So between the marketing and the differentiator of design build, the company took off and did well. And then naturally, as the amount of work came in that could support, a full-time architect, and that's of course when I transitioned and hired somebody as a full-time architect, and then it led to a full-time interior designer on staff, and then it was 2 interior designers on staff, and then it just continued to grow, where I had a choice: do I keep hiring, or do I have some relationships that I could outsource to? So when you have an overflow, a bottleneck of work, we created some draftsman and architect relationships where we said, look, we want you to work on 30% of the project or 50% of the project, so we could be nimble and react to the economic environment, to what's happening with the company, and grow or contract as we need it. And outside of the recession, of course, 2009, my company, we were profitable every year, even through the recession. And although we contracted, we did really well because of our business model, because we had so much of a backlog in design work. People are thinking about engaging in design. They're making those commitments a year or 2 or 3 or even 4 or 5 before they actually build. So we had a lot of momentum with those kind of commitments going into the recession. The majority of them kept going and took advantage of pricing. So those are some of the key things that we did. Of course, human capital is critical, and having the right team, the right people. And I'm not the smartest guy, but I think one of my gifts is to hire the right people and have a good sense about people. So I could weed out the people that I knew would not be successful in my organization, and really find the right guys and groom them and mentor them and let them do what they're really good at. And that was certainly key. I had an amazing management team that helped scale and grow the business. So yeah, those were some of the key initiatives.
Awesome. Good stuff. I really like, recognizing what's lacking and aligning yourself with others. I mean, that's something I've been really taking a look at in my business as well right now, is to be able to grow. How can I figure out how to align better with people, and versus trying to do too much myself? Because you can do it all on your own, but what are you trying to achieve? And so if you're trying to achieve something special, you just can't. You can't do it on your own. If you're trying to just buy one property, can you do it on your own? Sure. It takes you a while to get there. You'll get there, and you're not going to be able to grow. So that's something I've really been. It's really been speaking to me lately, is just being able to strategically align with the right people to grow and expand the business.
Yeah, 100%. That's been, of course, in the construction business, that's what I did. But in the last 3 years, I've seen that philosophy, pay dividends in terms of the distressed debt space, the apartment space. I also have a business coach that I go to quarterly in Toronto, and Dan Sullivan will say, you got to find your who. It's not, I think a lot of people get focused on how and what in their business. Is it what software or what market and all this? But a lot of it is your who. So who is your right partner to plug that one hole that you might be struggling with, whether it's underwriting, or whether it's deal flow and broker relationships, or is it asset management? So of course you're identifying what the issue is, and then you got to find your who is that right person.
Yeah. Yeah. 100%. I mean, and that's, yeah, I just brought on an underwriter, or not just fairly recently, but, and looking at, I brought on some people to actually try to find deals. And those are some key elements, some key holes that were in my boat. And you got to fill those, like you said. What's a big mistake that you've had, or just a mistake in general that you've had that you've been able to learn from and really grow
Um, well, despite me having, I should say, what I think is a good radar for people, I've certainly have made some mistakes with some partnerships that didn't work out, and that happens. And I think probably the mistake that I made is not that I got myself into some marginal partnerships and relationships, is that I let it get me down and exhaust me
from.
emotionally,
Mm-hmm.
rather than just looking at it as it's a cost of doing business. It's part of business. You gotta pull yourself out of it, see what happened, learn from it. How could I have structured this deal with some protections in place for things to blow up? I think I'll certainly have learned from that to imagine the worst without going overboard, because if you imagine the worst, you'll never get any kind of deal done. But have some more protections in place, but don't get so bogged down that it went south. Learn, move on, keep your energy and your spirit high so that you're ready for the next deal and you're ready to move on and not just get stuck.
Yeah, yeah, for sure. And moving on quickly is so important. And I've gotten stuck, like dealing with contractors. I can think of right off the top of my head. They're not doing their job. They're whatever, not getting the work done on time. It's not the right quality, whatever it is, and you just keep on like letting them continue to be on the job, not wanting to shake it up. And it's like, sometimes the partner is not the right person. You got to just move on. Um, is there anything now that you do to make sure that that's the right person? Obviously, there's never a perfect formula, but what are some of the things you're really looking for or doing to help make sure you're getting into the better partnerships?
I think I'm spending more time vetting them, certainly.
Yeah.
I think, a few years ago, I was more eager to get into deals, and I didn't know what I didn't know. So I think, time is obviously your friend, that if you are in it to a reasonable amount of time, long enough, you're going to understand what the pitfalls are. And when you're approached by potential partnerships, relationships, and deals, those red flags become a lot more evident. You just see them.
Yeah.
So, and even when I don't see them, I spend more time doing due diligence on the deals and the partners and trying to de-risk the deal as much as I can. I'm in a place in life, fortunately, that I don't have to do deals. I don't, I've done well. So the deals that I do have to make sense and not, put my family and the work I've done for over 20 years at risk.
Yeah. 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 I think, you said it earlier, is you're building that relationship first. The guy that's just giving you a call that says, "Hey, I need some earnest money." You're going, who are you? Like you said, versus if we build a relationship, a lot better. Okay. Yeah. I would enjoy working with this person, partnering with them. Now we can look more at the deal than focus on that relationship, which I thought was really valuable information you gave right away.
Yeah, I think it also speaks volumes of people that are willing to put in the time to build a relationship and do the work.
Yeah.
And I think that's the way they're going to handle business and the deal, right? Versus just transactional. I need X. I'm going to panic. I'm going to find my who or my what and call you last minute. I think that speaks volumes on the other side of things for the type of business person that they are.
That's really good advice. And those who didn't really take that, I mean, you listen back, you want to be a person that's focusing on building relationships and focus on that versus just like that, the next deal, and focus on the what. You want to focus on the who, and how building those relationships, forming that, making sure you've got good people behind you, in front of you, is so important. And I hear it over and over on this podcast as I interview people. So many people talk about the team being one of the most important factors of their success. And you're saying the same thing. So.
Yeah, 100%. And what's really interesting that I've noticed, that you don't think that one person could, or one relationship can make that significant of a difference. But what I find is, when one person comes into your world, they have so many other relationships. So the multiplier effect is so powerful that you're having a discussion and somebody says, well, my buddy, went to college down there, and yada, yada, yada. Before you know it, there's another relationship that has another relationship. And that's just the way this business works. So it's key.
Definitely. What's a daily habit that sets you up for success?
Good question. I think the biggest thing that I do is consistency. And I try to, all of in the two buckets of businesses, the top three initiatives that I need to do to be successful, I just try to stay consistent. There's not a lot of, in my mind, rocket science in this.
Yeah.
What I've been getting better at is really setting long-term goals, but then working backwards and breaking them down into bite-sized, whether it's a monthly, quarterly, or even daily goal, how I get there. Because if you're not measuring and monitoring your path as you go along, it's easy to look back, 2 months and say, I really haven't done anything to work towards that goal of mine. And, it's funny, I hear people saying, I want to get to 450 million under management in 3 years. But I don't see them acting and talking about what that means in terms of, how many broker relationships that's going to take. Is that possible in one market? How many deals are I obviously going to have to close on a quarterly basis to get there? How many investors they need? So that's what I mean, is you have to really break that down. And say, okay, I've got to talk to 5 investors a day. I've got to talk to 10 brokers a day, yada, yada, yada. What does that roadmap look like? And, I think as a result of overconfidence and a good track record of success, I've always felt that I could just do that intuitively, and just say, okay, here's what I need to do. I know, what I mean? I don't have to have it on a piece of paper.
Yeah.
But it becomes evident as you pivot into a new business how critical that is, and how overconfidence can get you in trouble if you don't map it out professionally.
Yeah, super sound advice there. Because we can all say we want to have $450 million worth of real estate, but what does it actually take? We don't know what it takes. How are you going to get there? Like just having an angle doesn't mean really much at all. You have to know the roadmap.
And I think it's some people may find out what it takes to have 450 million, whatever that goal, and they realize I don't want that, because it's going to take 14-hour days, or it's going to take maybe 7 partnerships. And some people say, I got young kids, I want to work 40 hours a week. I don't want 7 partnerships. I don't want to do what it takes to do that.
Yeah. I agree 100%. What's a favorite book that you can give to our listeners?
Man, good question. I'm reading an interesting book about distressed debt, and forgive me, I'm not going to be able to remember. I think it's called Bad Paper, and the author is Halprin. But it's an interesting book, sort of, that weaves through the underworld of debt collectors. That's an interesting one that I'm reading, because it's a little bit fascinating how that whole underworld debt collection, it's almost like debt collection meets mafia. It's crazy. So that's an interesting read right now. but honestly, I need to re-up my library and get to reading a more broader scope of books.
That's good. Alix, how do you like to give back?
I really like to help young entrepreneurs. I think that giving somebody the confidence, the roadmap, the financial stability is one of the best things you could do for people. And I think with that, they end up paying it back because someone else has helped them along the way. I think they become empowered in a position of financial strength to help their community. So I love that, and it's right in my skill set to really look under the hood and help young entrepreneurs figure out their businesses, whether it's real estate, whatever it is. I've had literally this week a few phone calls from referrals of younger, or not necessarily younger, but earlier in their process of starting businesses, evaluating businesses, and I love that. So that's one of my ways to give back.
Yeah, no, that's awesome, and it's definitely needed. I mean, we need to continue to have good, solid, strong businesses that help boost our economy and move things along in the right path. So that's awesome. Last question before we wrap up. What are your 3 pillars of wealth creation?
Yeah, that's interesting. And I need to write that one down, but I'll go back to the intuitive of really what I've done. Diversification, I think, has been successful for me, that I've never put all my eggs in one basket. So whether it's having the engine of cash flow, which is your primary business, and then living below your means, I've always done that. I've never, bought flashy things, and so I've taken that cash and reinvested it. I've always looked at. I still have an amazing CFO that scrutinizes every maneuver and deal and opportunity for good, smart, tax advantage investments. So everything I do goes through that lens as well, because doing a smart move 1 year, but doing that over 20 years, the compounding effect is incredible.
Yeah.
And then I would say, back to kind of the meat of our conversation, is finding your who and leveraging relationships that allows you to scale. If you do that, I think you can create a tremendous amount of wealth. And obviously, I believe in real estate as the main, vehicle for wealth, whether it's notes, apartments. For me, I look at that as, and it's not just, I look at some of the guys that do fix and flips, and it's great for them, but it's transactional. It's one time, and then you're done. So I love the fact that in the note space, the apartment space, you do the work, the heavy lift up front, and of course there's work along the way, but it keeps on paying.
Yeah.
And that's how you really build equity and wealth.
Yep, absolutely. I got a question I didn't ask you at the beginning. I meant to ask you, what'd you teach in high school?
I taught, coincidentally, I taught business and history. So I've got, dual degrees, and I was always interested in history, but I grew up in an entrepreneurial family. So
yeah,
there I was teaching basic marketing and basic business to high school kids, which is pretty cool.
Yeah, definitely. Well, awesome, Alix. I really appreciate you coming on the show. How can our listeners get in touch with you if they want to reach out, want to learn more about you and what you do?
Sure. So my company is ashlandcapitalfund.com. You can get on my website, reach me there. My first name is spelled with an I, ALIX, at ashlandcapitalfund.com.
Awesome. Alix, again, really appreciate it. A ton of good information. Awesome story, and I had a lot of fun on the show. So thanks a lot.
Todd.
And have a fantastic rest of the day.
Awesome. Take care, Todd. Talk soon.
Hey, thanks, Alix Kogan, for joining us on the show. Appreciate having you. And a couple key items that I took from the show. First of all, recognize what is lacking in the market and then fill that in. Next thing Alix talked about is, look, just having the right team, so important, having the right people, and aligning with others that are successful. And then the last thing he talks about is just diversifying, making sure you've got a good diverse portfolio, good diverse business, and leading that to success. So again, appreciate Alix for joining us on the show. Hope you learned a ton. I know I did. And take just one thing from this episode, apply it to your life and apply it to your business and see the results. I'm Todd Dexheimer, signing out. Make every day a Saturday. Thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.